I was in the value investment industry. I was at a fund that managed about 20 billion on the domestic equities team. So this asset class, wine and spirits, it was really interesting to me. The quick one-liner on Vint is that we are securitizing the wine and spirits industry, allowing investors to really efficiently get exposure to the asset class. My competitive advantage is that I am the least passionate person about wine on the business team. I care about markets.
Have you tasted any of these 100 to 150,000?
I have not. One day I hope to.
Welcome to Value Add, your edge in building wealth. Hey, today we have Nick King to talk to us about investing in alternate assets, specifically wine. Hey, Nick.
And Nikhil, I'm looking forward to this conversation.
Likewise. So, Nick, tell us a little bit about how you got into wine investing.
The quick one-liner on Vint is that we are securitizing the wine and spirits industry, allowing investors to really efficiently get exposure to the asset class. My background, I was in the value investment industry. I was at a fund that managed about 20 billion on the domestic equities team, got to learn a lot and really apply that value investor mentality to a new asset class. So I was looking to build a diversified portfolio. In order to do that, you're looking for these uncorrelated assets. I think people like to think that stocks and bonds are uncorrelated, yet typically when those asset classes decrease in value, the correlation tends to converge towards one. They look far more correlated in down times. So this asset class, wine and spirits, it was really interesting to me through that lens of building a diversified portfolio. Cambridge ran a study dating back to 1900 showing about 8.5% annual returns, surpassing in terms of performance. It is largely uncorrelated to traditional financial assets. You think about what this asset class may be correlated with, you look at scoring data, you look at weather, and then the overall wealth of the 1%, because you think who is buying fine wine and spirits, it is going to be the top 1% or top 0.01%. And finally, what was interesting to me about the asset class is that it's highly economically inefficient. It's very opaque. Information asymmetry is rampant, which allows you to create an advantage and source assets below their intrinsic value, which is exactly what you're looking for in any sort of value investment. So those core tenets led my co-founder, Patrick. He was a software engineer at Capital One, friend from college, to explore how can we invest in this asset class. We ran a small portfolio, generated about 30% returns in a short period of time, taking advantage of some of those arbitrage opportunities. However, when we look to get broader exposure, the only way to invest in the asset class was basically you needed to cut a $25,000 check to someone in the UK and you would get a list of wines back 3 weeks later. Really inefficient, opaque, largely inaccessible, and frankly, just not a financial product. So with that in mind, we spent 8 months with the SEC setting up a structure under Regulation A+ of the Jobs Act, which allows us to curate thematic collections of wines and spirits. Could be regional, could be producer based, could be a single vintage, file paperwork with the SEC, securitizing those assets, allowing anybody, accredited, non-accredited, institutional, IRA investors, anybody can now really efficiently and transparently get exposure to the asset class, solving those problems that I had just laid out. So our collections range in size from 25,000 to 500,000. It could be anywhere from a single bottle. Today we did a single bottle of Macallan. It was a 68-year-old bottle, $80,000, sold out in about 10 minutes to over 100 investors, to 1,000 bottles of Bordeaux wines across a certain vintage, building a diversified portfolio. So that's what we're doing. We've been doing it for just above a year and a half. We've done about 60 offerings on the platform. raised about 7 million in outside cap from venture and angel investors.
One of the things that stood out that you talked about just now was people think that stocks and bonds are uncorrelated. I think last year was clear evidence that they're very correlated. Actually, even crypto jumped into the group and they all kind of fell in unison. So that's actually why I personally also started looking into alts. So looking at how the market was doing last year, where else can I put my money? It's very, very interesting space to be in. I was doing some research of my own. It was very, very interesting to me that certain wines, I think it was Burgundy and Champagne, outperformed significantly. I think it'd be interesting to dive into how does wine investing currently work? And it's typically big paychecks, 25,000, 50,000. You mentioned that you can buy a bottle, for example, of whiskey, you mentioned, but I believe historically you couldn't necessarily buy a bottle of wine, especially in fine wine. So maybe let's talk a little bit about how wine investing or fine wine investing has worked historically and how Vint is providing more access to that.
Definitely. So I gave one example, which is you cut the $25,000 check, you send it to someone in the UK, and you get a list of wines back 3 weeks later. A ton of problems with that model. This asset class has been invested in and has been a proven store of value for a really long time. However, most people have not bridged that gap to think about it as an investment. I think if you ask a sample of people, have you heard of wine investing? Most people are going to say no. But if you reframe that question as, have you heard of that guy who has a wine cellar with 1,000 bottles of wine in your neighborhood? People are going to be like, yeah, I've heard of that guy. So that's one thing that we're trying to bridge that gap, because previously the only way to do this, it was that guy who has the cellar, who has their wine guy or girl that they go to source assets. Very capital intensive, from building your own storage unit, and then also very time intensive where you have to build the relationships. It's very old school, and it's just not how people invest. People don't call their broker and ask, hey, what stock should I be buying? Yeah, some people still do that, but you've seen the emergence of platforms that really act as an on-ramp to investing or certain asset classes. So that's how we're thinking about Vint, is we are the on-ramp for investors to get exposure to the asset class. With being the on-ramp, there are a few things that are necessary in terms of making it more accessible and really getting people into this asset class. One is education. So we talk a lot about what makes this asset class investable. Why are we sourcing certain types of assets? How does this asset class fit into your portfolio? And our emphasis in terms of education is financializing the asset class. Sure, we'll do events and fun pieces of content that talk about the varietals, tasting notes, those kind of things. But at the end of the day, we need to financialize the asset class. So talking about returns, volatility, correlation in all of the research that we're doing, I view to be really important in terms of an on-ramp for people investing in the asset class. Beyond just financial research, providing the basic understanding of how does it all work? How are we sourcing? What are the variables that we're looking at? So education, I view to be really important in terms of the on-ramp. And we make it really easy for you to get started. You can make an account. We KYC AML check all investors, and you can be invested within about 3 minutes from signing up. So education combined with simplicity and ease to get exposure to the asset class is how I view us to making this more accessible.
That makes a lot of sense. I think that helps provide a lot of context. My next question is in line with providing a lot of access. What is the minimum investment amount? And then what is the typical lockup period for that investment?
The minimum investment is either $50 or $100. Today's collection I'll use as an example. It was an $80,000 collection, 800 shares at $100 a share. we're the lowest point in terms of getting access to the asset class. But what I like to highlight is that we are far and away the best product in this space. Why I confidently say that, obviously I have some bias here, is that we've done a lot of research, and that research has shown us that the best returns come from the most expensive assets. The higher the price to score ratio, the stronger the returns have been across the wine industry. So if you think about today's example, an $80,000 bottle of Macallan, the only way for you to really get exposure to that is through a fractional share type of
Yeah.
platform. Otherwise, you need to have, say, a $2 million portfolio. Why I say that number is I think about wine and spirits just like I think about stocks. At my old firm, we weren't allocating more than 3 or 4% to a single position. So if you're building a diversified portfolio, you want to own this Macallan 68-year-old bottle, you would need a $2 million portfolio to do so. So the fractional
Yeah.
nature, you could have bought one share in every Vint offering, all 60, it would have cost around 4,500 and you would have exposure to the best assets. So minimum investment, really accessible and really, really efficient diversification when you're building a portfolio on the platform. When it comes to liquidity, we manage the assets. We guide towards a 1 to 7 year hold period. We've exited 6 collections on a partial or total basis thus far, yielding a 30% net annualized return. So that number, I think, speaks to one, the asset class. All these exits have been over the last 9 months. Obviously, the last 9 months have been quite volatile and largely down across most asset
Yeah.
classes. So lack of correlation, then our ability to find alpha and exit above fair market value or to source below fair market value, adding excess return to that equation. So we've considered other liquidity options, but view this managed approach to be conducive for what is a medium to long-term asset class. We're very clear with how we market. We're not trying to quick flip this asset class. You need to let it age. Think about it over a medium to long-term horizon, because if you
Yeah.
think about the fundamentals of the returns here, there's an upfront sourcing advantage. But what I find to be really interesting with wine being a consumable asset is that you have really the basics of supply and demand that you learn at Econ 101 working for you, where supply is ever decreasing.
That makes a lot of sense. So you mentioned a 30% return over what time period was
Yeah,
that?
those hold periods were anywhere from a few months to a year, and it's on a weighted
Okay,
basis.
got it. Wine is obviously very different from other assets and stocks, bonds, etc., which have very clear due diligence process of whether you're doing fundamental investing, value investing, growth investing, whatever it might be. How do you look at due diligence for such an asset class?
Sure. We have probably the best manager in the world on our team. His name's Adam Pierre. He's one of 50 masters of wine in the US. He was previously the president at a big wine merchant, and he's a very data-driven individual. So we take a two-pronged approach when it comes to sourcing assets. One is the fundamental analysis. With decades of experience on our team, we understand the market just as well as anybody. So identifying regions, vintages that are quality from a fundamental perspective is one of the key factors that we use in terms of sourcing. The second key factor is data. The wine and spirits industry is notoriously outdated. There's been very little use of data until really recent years. So we're taking in data from the UK market, the US market, the auction markets, and we're identifying assets that may be mispriced or undervalued and layering that into the fundamental analysis piece when we're sourcing these assets. So I do view us to have an advantage because we do have a team of engineers who built this data pipeline and ways to visualize this when we're sourcing, and also the experience piece. I view us to have an edge when it comes to sourcing and diligence on the assets.
I was doing some digging in the wine industry. One of the interesting things, as you mentioned, it's not very data driven. They have this whole process of scorecards and critics, and then they have certain regions like Burgundy is relatively new, but Bordeaux, for example, would be a historically high performing region. And the way I understand it is there are a few critics who are well known in the industry, and they taste the wine, score it on a 0 to 100 scale, and kind of come out with what their opinion is. And that is one driver of price. So the other one would be how limited the supply is, which you touched on as well. So are those kind of the factors that you're talking about in terms of capturing the data and visualizing it?
Yeah, pricing data, scoring data. We look at the brand power, supply data to really take a holistic approach when it comes to sourcing these assets. Just because a wine has a 100-point score from various critics, we still want to make sure we're getting that at an attractive price. So we don't necessarily overweight or make decisions based on one of those factors. It is really holistic.
Got it. So maybe let's talk a little bit more about how Vint specifically works. You mentioned if you want to invest in wine, you would have to, one, obviously identify what wines you want to invest in. So you'll have a due diligence process. Two, you'll have to purchase, I'm assuming through a broker or something. Three, you would have to store, which you mentioned. You store facilities in the UK. And then before, at some point, you would have to sell. Is that the typical life cycle?
Yeah, that's a good outline of a typical life cycle. I just talked a lot about how we source. So once we source the assets, we will file paperwork with the SEC. You can go to sec.gov and find over 200 pages. It reads very similar to an S1 or a 10K, outlining here are the assets, here's some supporting information, how do we do what we do. It's far and away the most transparent across the industry because when you work with regulators, which in my view, in order to create a new asset class, you need to do so, you have to disclose all of this information. So we source, we then file all that paperwork, securitizing the assets, allowing investors to invest. So once we receive qualification for our offerings, we have our platform, it's vint.co. We will release collections on a weekly basis, 1 to 2 a week. And investors, as I outlined, can make an account. They can buy shares on the back end. What we're doing is we're managing the storage, ensuring we store with various storage facilities such as Octavian, London City Bond, Domain, Global Storage Network. All of these are specifically wine and spirit storage facilities because you need the temperature control, the humidity control, and you need an
Yeah.
understanding of the asset class where at these facilities they are doing provenance checks, quality checks to ensure quality and authenticity of the assets. Meanwhile, we're ensuring the assets over the entire life cycle of the collection. So source, securitize, we maintain the storage and logistics over the hold period. And then over that hold period, we are following trends, following data to determine when is a good time to exit these assets. We exit through a number of channels. We have licenses to exit here in the US. We have federal and state licenses to do so, but we also have partners across the world in the US, in the UK, across Europe, Hong Kong, where we can exit through those channels as well. We're going to find the best price possible when it comes to exiting. So we exit the assets and then return the proceeds to investors on a pro rata basis, completing the life cycle of a collection.
How does Vint make money?
Yeah, we use a marketplace model. We charge an upfront sourcing fee. The sourcing fee can be anywhere from 5 to 20% on average. You are value prop to be access and saying especially when you think about doing this yourself, you're probably going to have to source through retail. With retail, you're going to pay a higher price because a lot of exchanges and places we operate are exclusively B2B. You as a individual cannot go to these channels and source. Storage, because we're doing it at scale, it's 1 to 2 percentage points more efficient than if you were to do this by yourself, which really adds up over a 7-year time horizon. And then finally, because we own the exit channel through our partners, through our own channels, there's very low transaction fees when it comes to exiting, as opposed to auction houses where most individuals need to exit and they're going to charge 30% transaction fees.
Interesting. I guess one thing I wanted to touch on was you mentioned you're the best platform available for wine investing or spirits investing. What do you think of your competitors and how do you differentiate yourself from, for example, Vino West or Cult Wines?
Yeah, first and foremost, nobody else works with the SEC and FINRA. That's first and foremost. The level of transparency and just working with regulators, the process I view creates a higher level of trust for investors. Second is efficient diversification, kind of what I was describing. This is really where I will go to bat and say nobody else can do this, because every other platform works where, Nikhil, you'll send them $10,000 and they're going to go out and try and source within that constraint. We have no constraints when it comes to sourcing. We're purely looking for the best, highest quality assets. One would expect there to be greater returns because we don't have to build a $10,000 portfolio. We can just go out and source the best assets. And because of that fractional nature, you can really efficiently diversify across the asset classes. That is how I view our main differentiators, is the regulatory structure that we have established. We spent a ton of time and a ton of money to do so, but in my view, that's how you create a real asset class. And then second is that efficient diversification.
Yeah, I don't think Vino West is working with the SEC. And if you want to actually securitize the product, you actually have to work with regulators too. So that makes a lot of sense. Just to bring it down to earth for people who have never invested in wine before, if I go to the store, I can find wine for like $5 to $500, for example. You're talking about collections in the 25,000, 50,000 range. I might be mistaken here, but typically I would imagine it's like 6 bottles in a collection or 6 bottles in a cask or something like that. What is the average bottle? I mean, obviously there's no average bottle in fine wine. I'm just trying to provide some color around what kind of prices are we looking at on a per bottle or per collection basis?
Yeah, that's a good question. Bottle prices range anywhere from $100 to $150,000 for a bottle.
Haven't tasted any of these 100 to 150,000.
I have not. One day I hope to, but that's pretty funny. One thing that I say is that my competitive advantage is that I am the least passionate person about wine on the business team. I care about markets, and why I say that's a competitive advantage is this market is broken on many fronts. I personally don't want someone who's super passionate about Napa cabs going out and building these collections because they might have a bias towards adding more these big bold Napa cabs to offerings, even if they might not provide the best investment potential. So I provide that balance, the value investor balance.
In that respect, I found love in wine investing or got interested in it just from a diversification and alternate investment perspective. I'm not a big wine drinker personally, but I would be very curious to know how different $150,000 wine tastes versus $40 wine.
I'd probably defer to Adam, who is the master of wine, who has been fortunate enough to try some of these very expensive wines. With it, there's a lot of history and brand power, which is why these assets can command such high prices, that they've been doing it for hundreds of years, and they've built this luxury brand that can command really high prices.
That's a very interesting point. You're absolutely right. In like hundreds of years, Burgundy, Bordeaux have built a reputation. There's a certain taste along with those wines from the regions, the grapes, etc. Are you at all looking at what is the future? What are some of the up and coming regions? And how are you thinking about that in terms of a competitive edge?
Absolutely. We look across the world. We like to classify these into core, trending, and emerging categories. So core, you've got your Bordeaux's, your
Okay.
Burgundies. In the trending category, you have Champagne, you have Italy, you have the Rhone Valley. Then in the emerging markets, you have something like South America, Australia, Spain. So we view that diversification that you can achieve really efficiently as a way that you are able to take a really broad bet on the industry. It's not just Bordeaux or Burgundy, but it's a bet across the industry. We've recently expanded into bourbon. We have a rare whiskey offering that includes some bourbon as well. Whiskey, we started with scotch, we've done some Japanese whiskey, and now expanding into bourbon as that has been requested by our investors. But we are looking to push the boundaries of what's investable.
I think we got a lot of good information about the wine market in general, but curious to hear your take on the macro environment. For example, last year, public markets didn't do so well, but the wine industry did. The wine index outperformed significantly. To me, it looked like it was a spike. Not to say that wine investments aren't on the increase in general for all the things that we talked about, but it did seem like there was a spike in the returns last year specifically. So curious to know your take on the near term and long term outlook on the wine market.
Starting at the broadest macro, last year, inflation was a pretty huge talking point, has turned out to continue to be a talking point. When we are in inflationary periods, people look for other stores of value as the sentiment around the dollar has decreased. Cambridge study that I mentioned, over that 112-year period, 2x inflation, showing that it can be a hedge and a strong store of value over a very long period of time. So inflation was a tailwind for the tangible asset space, especially wine and spirits. Subsequent to inflation, we had rising interest rates. Wine and spirits, especially at the top end of the segment, function largely independent of interest rates. You look at scoring data, weather data, and then with these assets being a luxury good, as long as the wealth of the top 1% keeps increasing, the asset tends to appreciate. There was a really interesting podcast by Acquired where they talk about LVMH, and the most recession resilient assets are luxury assets. Within wine and spirits, I view one of the other tailwinds to be just the inflow of capital into the asset class. As we discussed earlier, if you walk down the street, most people aren't going to know about wine investing. However, if you walk down the street 2 years
Yep.
ago, I think even people would have known about it. If you walk down the street 2 years from now, I think you're going to see multiples of people today who know about this asset class. So more capital is going to flow into the space as we increase education and awareness around the asset class. So I view us to really be in the early innings here. Frankly, volatility is good because it makes people take a second look at their portfolio. Over the last 12 years, things have been nice and dandy. The 60/40's done well for people. There's no need to change. But
Yep.
volatility, losing money, loss aversion leads people to make change and look for alternative asset classes.
That makes sense. I think the 60/40 theory, it's been great and worked really well for a long period of time. But now that there's more liquidity in other markets and other alternate assets, like there's no reason why that breakdown should change and include some shape or form of alternate investment. Even the OG of like real estate to some of the newest liquid investments like wine and spirits. I want to talk a little bit about your startup journey. As I understand it, you guys started in mid 2019. What has that journey been like for you? You've come from investing background, so from the finance side of the house. What were some of the biggest challenges that you faced during that time?
Yeah, it's a good question. It's definitely a journey. I think you have to treat it as a journey where there's going to be ups and downs. Great book called The Messy Middle by Scott Belsky, really about the startup journey. So let me start positives is that I get to learn every day. Every day is different. It is really a challenging, fast-paced environment to operate within. I enjoy that. I want to be pushed. That's core to my motivation around this is a challenge and I get to learn a ton. And frankly, it's a huge opportunity in a really broken market that gets me excited. There are challenges all the time. Fundraising, whenever that comes around, that's always a challenging process. So in October 2021, we closed a 1.7 million pre-seed round. First time ever raising capital. There was a necessary learning curve where I started fundraising in May and it took 5 months to get it done. So looking back at how I approached that process, May 21 versus this most recent fundraise, it's probably embarrassing to look back on that, but it's all a part of this. I remember being exceptionally nervous in my first venture conversation. It's never easy. It's never easy. One thing that I trying to get better with is, yeah, you have ups and downs, but trying to moderate those ups and downs between fours and sixes as opposed to twos and eights, which can happen sometimes.
Oh, I'm sure it's a roller coaster of a journey. 2021, people thought fundraising was a joke. Everyone's like, yeah, there's plenty of money in the market. 2022, and at the same time, in 2021, you were fundraising. For you, it would have been a lot of lessons learned, and a lot of new founders don't realize how challenging fundraising can be. I remember talking to a few folks in 2021. They're like, yeah, but a fundraising round is like, we're doing this for 2 weeks, 3 weeks. We'll be focusing on the business. Yeah, that took much longer than expected. In 2022, as you pointed out, April, May, the market completely turned. Tiger Global kind of imploded-ish. They kind of flooded the market a lot. So that was very, very interesting turn in the market, both in terms of venture capital, but obviously it was stemmed from broader issues as well. Lots of challenges there. You mentioned persistence, consistency, and then keeping your highs and lows between fours and sixes. I love those three things. Last question for you. So you've been an investor for quite some time, value investing, you mentioned. What are some lessons you would point back to? Like, for example, if you could tell yourself some lessons when you were just starting out for some of the new investors who might be listening.
Investing is far more psychology than people think. Managing that behavioral finance is equally, if not more important than the actual understanding of the technical side. You're not really taught that. You're taught how do you build a DCF, how do you think about valuation of these assets, but it neglects the behavioral part, which is just as important.
In business school, the focus is a lot on fundamental analysis. As you put it, the valuation, what is the fundamental value of this particular asset? Yes, absolutely right. We're not thinking enough about herd mentality or, behavioral thinking or behavioral finance. I think that's great advice. Nick, thanks a lot for joining us. This was an absolute pleasure. Learned a lot about wine investing, learned a lot about Vint. Thanks a lot for your time.
Thanks,
Really
Nikhil.
appreciate it. And that's today's value add. If you liked today's episode, hit that like and subscribe button. For long form written content, subscribe to my newsletter. Otherwise, say hello on Twitter. See you there.